All right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk about Marathon Digital Holdings, stock ticker MARA. Marathon is a Bitcoin miner. We cover the Bitcoin miners and Bitcoin quite a bit on this channel. So if you're new to this channel or you haven't yet, please hit the subscribe button and the notification bell. And also, everybody, please smash the like button for us. Feel free to leave a comment below, and you will see in the pinned comment, there is a link to our free Discord. We also have some upgraded levels in there. The base level's free. We'd love to have you. Let's talk about Marathon. Couple of things going on with Marathon. They put out a press release earlier this week that I want to go through that has to do with going green and using cleaner energy. So I want to talk about that because it's fairly significant. But that's not the big thing I want to talk about. I want to talk about an interview that the CEO, Fred Thiel, had and what he said in that interview. I don't want to read too much into it, but I do want to read it with you guys, give you my thoughts on it, because he seemed to be indicating that potentially Marathon was up for sale. So again, we'll get into the details. I don't want to over-exaggerate. I want to show you guys exactly why I'm thinking what I'm thinking. So we will go through that together. First, I want to just quickly go through the energy part of this, because this on itself would have been the big news. Okay, Marathon Digital Holdings announces intent to transition Hardin, Montana Bitcoin mining operations to more sustainable power sources. So this was on April 5th. This was issued on April 5th. Hardin transition reflects Marathon's commitment to achieve 100% carbon neutrality by year-end 2022. So that is a lofty goal, and I will tell you, Marathon has been perceived as really lagging behind in the ESG. Particularly, everybody is focused on the E, which is environment in the ESG, and the Hardin plant is burning coal. That's about as far from green energy as you can get. As everybody may notice, the Bitcoin miners in particular are being heavily, in my opinion, unreasonably scrutinized as to becoming 100% carbon neutral. That really is not the expectation. There's no other industry that I'm aware of that is anywhere near 100% carbon neutral. So to me, having responsible ESG means having a plan to get to being carbon neutral, showing significant progress in that plan, sticking to your plan. This rush for everybody to get to 100% carbon neutral at all cost doesn't make a lot of sense to me, but the fact is there's outside pressures being put on specifically onto the Bitcoin miners, and they're really being forced into doing this. I think most of them were moving this way quite a bit naturally on their own. Marathon, the way they started their business, they just didn't have the access to the green energy, so they were burning coal. They are going to shut that plant down. So let's just read a little bit here. Marathon Digital Holding, one of the largest enterprise Bitcoin self-mining companies in North America, today announced the company's intent to transition its Bitcoin miners from the facility in Hardin, Montana to new locations with more sustainable and non-carbon emitting sources of power. In 2021, Marathon announced that the company's mining operations would be 100% carbon neutral by year-end 2022. To achieve that goal and to build upon its current strategy, Marathon intends to transition its Bitcoin miners from the facility in Montana, which currently derives its power from coal-fired power plant, to new locations with more sustainable sources of power. The transition is planned to occur in stages to minimize the downtime and is currently expected to be completed during the third quarter of 2022. Then Fred Thiel, the CEO, says, Marathon made a commitment for our mining operations to be 100% carbon neutral by the end of 2022. To achieve that goal, we have endeavored to ensure our miners are sustainably powered as possible. Marathon already has about 60,000 plus miners that they have received that they have yet to get up and running. So now in addition to those, they're going to have to take all their machines out of Hardin and move them probably to Texas or wherever the case may be. So there's a lot of logistics going on with Marathon this year, and for that reason, they're far behind their exahash goals. However, they've assured everybody that by the beginning of 2023, all of the machines will be in their place and operating, and they'll be at 23.3 exahash. So for a period in the middle here, they have fallen behind, but they've basically expressed over and over that by the beginning of 2023, they will be caught up. So this is a big undertaking, and this ESG is very important right now in the investment community, and it's growing and growing. So that kind of leads me to the next thing I want to talk about. I want to talk about an interview that was given to Fred Thiel recently and what he said. This article is from Investors Business Daily, and this was an interview with Bloomberg. Okay, so they go through several paragraphs of just describing what Marathon's business is and the history of their business and how they've gotten where they've gotten to, so we don't need to review that. What I want to go down to is this section right here. CEO open to acquisition. In a March 31st interview with Bloomberg, CEO Thiel said that he would consider an offer at, quote, the right price. Quote, if somebody offers us a huge premium over our market cap, I have to take it under consideration, and that may be the right thing to do for the investors, he added. Thiel says energy firms are in prime position to take over Bitcoin miners. A generating company can sell their electricity to themselves at a lower cost, so they would be the most profitable Bitcoin miner over time, he explained. So I just want to break this statement down a little bit. A part of this is just CEO speak, and there's certain things you have to say, but I want to break down the fact that I don't think he quite said those things. So what I would have expected in this situation, and what the typical answer would be if somebody said, would you consider an offer? The typical answer would be, as a CEO, I have a fiduciary responsibility to the shareholders. I would, of course, look at any offers that were given to us. At this time, we're not looking to be acquired by another company. But of course, we would do what is best for the shareholder. But that's not really what he said. Particularly this last sentence, where he goes on to be rather specific that an energy company, what he calls a generating company, can sell their electricity to themselves at a lower cost, so they would be the most profitable Bitcoin miner over time. So he's basically signaling that if energy companies want to go into Bitcoin mining, they are going to be more efficient than Marathon. Now that is an oversimplification. That is only one part of the vertical integration to be a Bitcoin miner. And there are many pieces to this puzzle. So I think he's oversimplified this situation, but I understand what he's saying. Obviously, if you provide your own energy, you're going to get energy at cost plus zero. But this was a rather specific response, in my opinion, to what was probably just a question. The person asking it was just fishing. I don't think they were expecting a real response from this. So the question as a shareholder, and I hold some stock in this, and I'm sure a lot of you who watch this channel have Marathon in your portfolio. The question is, he says, at the right price. If somebody offers us a huge premium, well, the problem with that is right now their stock is selling at a huge discount. So they need to double or triple just to get back to the market cap they were 6 months ago. So if somebody comes in and offers them triple, really, for me as an investor, I don't think that's a good offer. So I'm not sure what at the right price means. What is the right price? Most of the investors that hold Bitcoin miners have the same philosophy as we think the Bitcoin miners do. In other words, Marathon is holding all of their Bitcoin. They have a HODL policy. They have over 9,000 Bitcoin. A bunch of those are not self-mined. They did buy over 4,000 Bitcoin at the beginning of 2021, but since then, they've held almost every single Bitcoin that they've mined over the course of the last year. And the concept for that was that over time, those were going to grow substantially in value. They strengthened the balance sheet considerably, and Marathon has already put purchase orders out for 23.3 exahash, which is more than anybody else right now, and they're supposed to hit that within 12 months. So they will be mining a significant amount of Bitcoin if they can get to that point. Most investors would look at their current share price, and their market cap right now is $2.7 billion. Now, I will tell you, I'm recording this Tuesday night because Wednesday I'm going to the cryptocurrency conference in Miami. So that may have changed a little bit by the time you're watching this. Give or take, it's between $2.5 and $3 billion. This is the type of company that I know shareholders want to hold on a long-term basis for a lot more than a 2x or a 3x. A lot of people's cost basis is still 2 or 3x what their share price is. Again, as of the day I'm recording this, their share price is around $26. Well, just back in November of 2021, they were at $83. That's more than triple their current share price. So is that a good offer? Is that the right price quote? So that's what I'm wondering. I would like to hear more about this. I feel like that was a very open-ended answer. It was not your standard issue CEO speak. I feel like it went one or two steps past that. I don't want to put thoughts in his head or try to read his mind and understand what he's thinking of, but it does make me want to ask some follow-up questions as to what did you mean by that, and how, what is the right offer? Because as a shareholder, we want to know that, particularly since as a shareholder, there's now almost 20 publicly traded Bitcoin miners on the NASDAQ, so we have options where to put our money. If they're planning to sell, that's something I'd like to know. And even in a theoretical situation, as this was proposed to him, what is the right price? Now, I know he can't say exactly what the right price is, but they can give us some general terms as to what they're hoping their growth is. And based on what they've geared up towards, it looks to me like over a 5 or 10 year period, this company was looking to do something more like 10x. That would only make them about a $27 billion company 10 years from now. So that is not at all an unrealistic expectation. So again, I don't want to speculate. I don't know if this was just an off-the-cuff remark that he made and maybe he just went a little bit further than he intended to, but it did seem like quite a specific answer. So I'm hoping somebody gets an interview with Fred and is able to follow up on this. I intend to reach out to Marathon and see if they will talk to us about this. So I just wanted to put this on people's radar because this comment potentially may amount to nothing. However, I just wanted to put this conversation on people's radar. Hopefully either myself or somebody else can follow up with this question and get a little more clarification for shareholders. If they can do everything that they said and planned over the course of the next 6 to 12 months, then they're going to be at 23 exahash and they are going to be mining an awful lot of Bitcoin. And remember, Marathon has its own mining pool. So that is something else to bear in mind. The more exahash they get, the better they're going to get at mining and the more efficient their miners are going to be just based on the luck factor, which evens out over time as you have additional exahash. So those are my thoughts on Marathon. Just a quick update. Thanks so much for watching, and we will see you in the next video.